Welcome, everybody. This is Benito, TrueTrader Admin. Love to have you guys on. And of course, our very own favorite pro and former market maker, the Goose, is on talking about earnings.
All right. What's going on, guys? So real quick, the intro that I want to give is I've been asked a lot as we are in earnings season now, how do I play it? What do I look for? And there's some real basic things that I feel like I could share that'll kind of help give you a little bit of an edge, or at least what I look for, and how I come up with ideas, be it intraday, or some of my swings that I've taken. So I don't have a PowerPoint, as you guys know. I'm telling you guys, my disclaimer as always is, I'm not an investment advisor. I'm not your advisor. I'm just giving you my thoughts and opinions and how I trade them. So however my verbiage is, that's the actual plan of these videos and these little short webinars. That being said, if you have any questions, make it easy on me, type it into the Goose Room. If somebody does see something funny in the other room and they don't hear, please let me know, please. So with that being said, let me take off this fancy disclaimer that Benito had me put up. And I'm just going to have a chart up for now, and I want to talk about some basic things. And I'm going to use AMKR just as an example. It's not a one of the other big earnings names, whether it's an AMD's or Snap from the other day. I'm not I just want to use some examples, and I'm going to throw some things out, and you guys could type examples in the room with questions. I kind of freelance this, but I've talked about this in the past, and what I want you guys to get used to, and I'm going to pull up my Trade the News for a second. Hang on one second, and again, let me just see if this is the one I want. Nope. Where's my Trade the News window? I think this might be it. There you go. So I want to show you a couple things. So earnings are interesting. There's a couple ways. So where do we even get started? First of all, depending on what tools you use, everyone has different systems set up. But like in Trade the News, if you use, you could actually scroll to the bottom of the morning report, and you'll see the earnings that are in the morning and at night. So just going over a couple remedial things to help you kind of find out, okay, who's reporting when. There's a lot of technical things that you could use. I'm not going to get into some of the, more advanced things like options, implied, moves and things like that. I'm going to keep it kind of basic, but these are all tools that I kind of factor in, and I think there's a lot of them. But the main basics, and what I want to go over with you guys is I like to look at how the technicals are matching up with the earnings, and that's why I want to kind of use, there's a lot of examples, and I'll talk about in the room with you guys sometimes how a stock trades up into earnings, and then you see a pullback, and to me, that's always opportunity. You always got to have in mind is we don't have the answers. We don't have the luxury of having the answers of where selling pressure comes from. You could have a stock that has ridiculous numbers, and the chart looks great, and all of a sudden it's just getting schwacked and everybody's scratching their head, what's going on? And we don't have the answers to that. I mean, there are hedge funds out there and people that own huge chunks of stock, and we don't know their stories and why they're unloading, or what they were looking for, and it could be profit taking, Simon. There's a lot of different reasons, and it's not up for us to discover what the reasons are. Obviously, if something fundamentally has changed, it's a different story. But as long as there's nothing in that case, to me, that always is bringing opportunity. And it kind of leads me into one that I was looking at today, and I have a position in, and I'm actually in pretty heavy in this right now. With room, I do have room to add, but I want to talk about AMKR and what I looked at. And there's certain keys. Is a lot of people, for some reason, when they see a press release come over the wire, they look at the top and the bottom line, and that's. And I'm going to try to keep this real simple, so if somebody's kind of newer, they can understand it. But top and bottom line means revenue and your net income. Okay, so in talking about that, they might stop by looking at like an AMKR, for example, and say, oh man, they made 38 cents versus 23 cents, which is what they were kind of estimating, and then they did 1.35 billion versus 1 billion. Great, this is a no-brainer. It's a long, and you can't stop there. And this is just one example. what you really need to do is where the big boys are looking is everything is traded up based on forward earnings, and back in the 90s, and they still use them, price to earnings multiples and things like that. But as things have become so much more out of hand with multiples and things, that whole thing has changed a little bit in my eyes. I'm not saying that there's not industry averages and things like that that are still used, but that's again more advanced. Just sticking with some of the basics is what's really important is what is the company going to do next quarter? What are they going to do next year? And that is the most important things that you guys need to be paying attention to and looking at. And I'm going to give you some examples and just kind of word them out with you. So this is an example here on AMKR. Is they came out with their guidance and they're expecting 28 to 47 cents versus expected of 24. Okay, and that's Q4 guidance. And then they also went into the revenue, which was a pretty big beat as well. They affirmed their CapEx, and they came on the conference call yesterday, actually, and it acted just fine while it was on the conference call. If you actually look back, I'm not going to pull up the chart, but if you look back at yesterday's post-market, it kind of just jockeyed between, I think it was 13 and 14 or wherever it was. Hang on, I'll pull it up in this other chart so I don't have to minimize. Yeah, it was like 14s and 13s, and just kind of hovered there. That all being said is what now? You see a stock that's all of a sudden trading at 1170, and to me, that's where opportunity comes in on earnings plays. It's not just an AMKR. There's a lot of them. So then what I do is I look at that and I say, okay, this looks pretty good. Numbers look great. Guidance looks great. Coverage is okay. Coverage meaning, you'll have recommendations that come out on the stock and what it looks like. I mean, there are firms, and I've told you this in the past, that come out and people just follow them. Not blindly, but that's who they follow and who they recommend to their big clients. So if they're following UBS or Cowen or some of these large firms, they do have an influence on the heaviness of the stock or something like that. So that being said, what I want to do is I want to compare, say, okay, this is great. Now let me look at the chart on this thing. What does it look like? So next thing I do is I kind of pull up a daily. This is the daily on this side, guys. And I kind of take a peek at it and see, okay, well, what does it look like to me? Okay, we could argue the fact this traded up into earnings, right? So over the last, since October, kind of went up from 1150 up into 1350. That's not a giant move, about a 15, 20%. We've seen bigger, right? But one of the things I want to look at from this daily is I actually like this daily a lot. You could drag this back and you could see way back where it came from. But I mean, this is also back in March when we had the huge dip, reclaimed pretty fast. And you could see it has a really nice base up in this level, 200-day. This dark blue line is a yearly pivot as well as a monthly pivot there. There's a lot of support in this area. So to me, the daily matched up, and that's not where I started. This was my initial thought, was off in this area here, and to see how it acted. And I'm looking for a push up into this next yearly pivot based on those numbers and earnings and things like that. So I started in on this and I'm swinging it. But what I want you guys to look at is how do we justify this? Like everybody you scratch your head and you say, whoa, I mean, like they came out with incredible numbers and look at this. This doesn't make any sense. Listen, guidance is what they're looking forward on your numbers. Okay. Fancy Trees asked what guidance is. Okay, so to me, what I look for as a trader is opportunities like this, something that I feel really comfortable fundamentally on, and then the daily starts lining up. So there's a lot of examples of this. It flips around on the short side, guys, where I'm trying, and again, last minute I probably should have prepared and come up with 4 or 5 symbols, and you guys could feel free to throw up some symbols, but just talking things out with you is, it flips around on the other side. There's companies that will barely meet their earnings, let's say, okay. Nice answer, bot. That's pretty cool. They'll barely meet their earnings, and then you'll see their guidance, and they're missing on their guidance all across the board. And then you pull up a chart on it, and you see overhang and a crazy chart of all this, resistance above you, and it works just the opposite way. All of a sudden you'll see it pop up or whatever, and it's a beautiful short or fade down to the next support levels. So you could use these type of ideas and thoughts both ways. So I've been getting long in here. You know, I've been adding all the way down in this area. I think my lowest add was 1130 or so today. But I'll hold this. If it takes a couple guys, and again, my first statement to you is you don't know. We don't have the luxury, unfortunately, the old saying with the crystal balls, it's always kind of fun to joke around, but we don't have that luxury. We really don't. It's more of of one of these things where it could be one seller with a couple million shares. The stock's trade 2.5 million shares today. We don't know what the reason is. We don't have to answer. Maybe they're moving money around from one sector to another. You don't know. So spend less time trying to figure out why, you know, something is moving against you, and spend more time reading the chart, looking at the big picture on the daily, and making sure the numbers affirm, you know, what you're looking at. And that will give you conviction and opportunity. Hopefully that makes some sense to you guys. So there's a lot. And if one of you guys want to throw out a couple, you know, recent earnings things, you know, over the last couple days, you could feel free, and I could pull them up and we could talk about them and look at them together. Anybody want to look at any of these? You know, I'm kind of freelancing, and I give you guys the opportunity to post a couple up there of something that maybe, you know, come up. But I don't want you guys to, I don't want you guys to jump on a bandwagon of like, oh my God, it's got to be a short. Maybe there was something. I'll pull these up, Berkey and Luigi. Thank you on both of those. But this is an example. SAP was a good one yesterday. SAP came in what, $30 or something ridiculous. So I'll pull up both of those, by the way. But spend less time on looking for what is the reason, trying to figure it out. Don't try to. There is nothing out there that will tell us the secret. Maybe later you'll find out there's insider selling. Maybe a raise, a convertible might come out, but that's all hindsight when you see that. Okay, and it is, Ricky. I was joking. It's more sellers than buyers. So, but you guys have to recognize that as opportunity and not as a panic, not as something you're nervous about. When the sellers dry up, there's not an indefinite amount of stock. You have to remind yourself of that. And you see that the numbers are good. There's going to be some amazing opportunity there. So let's go into Chug for a second, and I'm going to freelance this with you guys and kind of look at it for a second with you guys. Hang on. So I'm going to pull up Chug-a-lug. And feel free to answer questions or ask questions, guys, on this. So this was one this morning was on my list. I had put a long off. I think it was 79 and 75 are my levels of interest on this, but I'm going to pull up the earnings for you, and let's just go over this together like we were looking at a brand new stock. So Chug's coming out with earnings, right? What are you looking at, Ricky? Chug, CHGG. All right. So, you know, what I want to look at is, so we're going to look at Chug for a second. All right. So here we go. We're going to click it. So another thing, by the way, guys, I want to make sure that I don't skip over is be very aware of conference calls. Okay. I kind of went on to the next thing, but that's also really important. I kind of slid that in last night of what happened on AMKR. But a lot of times you're going to see Q3, you know, 20 cents, blah, blah, blah. They'll give all their things, and then they'll say no guidance for fiscal year 2021. And a lot of times on those conference calls, they're going to give indications of how the market is doing in their industry. They might even slip in some, you know, areas where they're seeing weakness or strength. And that's also one of the reasons that you guys are going to start seeing some pressure on stock, or even adversely, the stock moving in your direction, you know, moving north. So those conference calls are incredibly important. You've heard all of us, you know, I think there was one today, Adrian was like, what, a BYD or something like that. What is, you know, can you tell me what when the conference calls? Those are extremely important because the stock could be acting perfect. The chart could look perfect. And the guys talks about how, you know, China's destroying them right now, but, you know, domestically we're fine. And the stock could get slammed on something on a conference call, or they could talk about, you know, their need for a raise down the road. There's so much that could happen. So during earnings also, and you could see it like with, and again, I'm in, you know, Trade the News. It always shows the upcoming, you know, calls and on the earnings right down here. Let me give you an example of which is one that's going tonight, just so you guys could see what it looks like. Who's reporting tonight? I'm going to come back to Chug. Don't worry. Chug-a-lug. FireEye. So, you know, what I do on a FireEye, let's say, it was just the first one I saw. It was the first one that caught my eye. So you'll see right here, 10:27, they report at 4. Sometimes they'll give the exact time, 4:30, whatever it is. And then they'll also tell you when the conference call is below. Thanks, Ricky. Also, the earnings whisper is a good one. But there's plenty of sites. The information is there for you guys. I don't want to get into all that and get all rah-rah and push you guys to work harder. You guys got to, put the work in. And the tools are they're there. I mean, even within our site, there's all different types of tools. You guys have it all at your disposal. Just don't be lazy. Going back to Chug, let's look at Chug together for a sec. So CHGG. So, Chug came out, right? And this is Chug is an interesting one. I'm going to put it over here for a sec. All right. So this was one again. So we're going to look at this, right? And I'm going to pull it up down here. Do you guys see down at the bottom? Does it cut off, or are you guys able to see that? You guys see what I'm talking about here? But you could see about 17 versus 12 cents, 154 versus 144. Now, they already had their conference call. You could tell because it would be down here, or there would be the number if it was going on. It'd be the phone number to call into. All right. But they raised their fiscal year 626 for 628. Let's see, initial guidance for 2021, pretty much a little bit ahead of expectations. By the way, if you guys are new to reading it, the E is estimates. On the end of this, again, I'm throwing in a little remedial part so you guys understand. So you see the estimation is 12 cents, estimating 144. That's a street-wide estimate, by the way, guys. That's not from one specific place. Okay, so that's where that comes from, and that's what we try to compare it to. Okay, just see what's the street expecting them to do, and where do they actually come in. A little cliff note on that is a lot of times when companies just meet expectations, it's not something that the market is usually excited about. You scratch your head and you go, well, you called for 10 cents and they made 10 cents and the stock is down. How does that make sense? That's a stock market for you. They want everybody to exceed expectations. So have that in mind. When you see a company just meet expectations or barely be above, sometimes that stock will get pressure, especially if it's traded up into. So I'm just giving you a little odd thoughts as I'm going along. So this is one right away. I mean, everything looks good on it to me. You got good earnings, you got good guidance, and now you're scratching your head saying, okay, I don't quite understand. Why is this stock under so much pressure? Well, let's take a look again at the chart on this. Right? Does anybody disagree that the numbers weren't okay? But here we go. Stock from October. This isn't like 3 months ago, by the way. This is just from really the September area. In the last month, the stock has moved up from 63 bucks all the way up into 90. All right. So what is that? It's just a sell on news. It's a profit taking. Now, why is it intriguing, and why was it on my list this morning? You guys could see this clearly, right, into a quarterly pivot, and you could actually see where it bounced today. It didn't quite get it was 75.82. That it got to today. You guys look at my list. That's where I had it written down, 75. I wanted it a little closer to 75. I got greedy. I didn't get filled, but it's up a few bucks from there. So I want you guys to look, but stop asking yourselves why. I don't understand, what the deal is. Look a little bit left. You don't have to, you don't have to drag this back, all the way down to here and figure it out. I mean, you can see where it's come from. Okay. Look, see what the stock's done over the last 30, 45 days. So why would this not be a common thing? Just a little bit of a pullback. Now, if you actually drew a retrace on something like this, which you guys know I like to do, and on a stock like this, usually, like I've told you, let this move right here. Let's just kind of put it right in the middle just for, oops, shoot. I'm going to redo it because you can't read it. Am I going too fast, guys? Or are you guys all okay? So what I'm doing now is I'm going to draw a quick fib just to show you something. I'm just going to put it down here in the middle just so you guys get the idea. Okay, usually on a stock like this, do you guys remember what I start to look at? I know Ricky does and stuff, but usually that 50% level is going to be the initial interesting spot for me on a retrace. So what I'm saying is this move from here went to here, and I drew a retrace from where the move started. And if you pull it back, you guys could see I didn't manufacture this. This is actually just me drawing it randomly with you guys now. Look exactly where that 70% retrace is. It's sitting right at that quarterly pivot and that 50-day moving average. Almost every time I would buy that retrace on a daily, especially on good names, especially when they hit on their earnings. Another little tool to throw into your arsenal. Okay, there's nothing wrong with looking at where the stock is retraced from. Don't just look at the, oh my God, the stock is down, you know, X amount today, or $10 or $12, right? Where are the levels? And you have to find these levels. And I always tell you guys, use multiple tools to affirm yourself. So right now, in this case, the reason I felt so good about 75, guys, you know, you know, you see a quarterly level here, you see a 50-day, and in this case, you actually had a Fibonacci retracement level as well. So you had 3 different tools on that to really look at. So there's a lot of different things there to be aware of and to look at. Try to maximize your tools of what you're looking at. So that was Chug. So, you know, Chug was on my list today. Early on, I wanted to trade it off 79. That 79 level is right up in here. You could see that there's a yearly level and a monthly level, and that's what I was trading it off of. It kind of dipped down there. You could see what it did, right? This early morning, the initial watch is a 5-minute, so it's a little bit different. And I want to show you where it popped up to. So if you played that 79, okay, came right down into it, which we talked about, stopped right there, and guess where it pushed right up into, right? Right into a weekly level there. So you guys got to also know where do I sell? A lot of people have trouble with, you know, where do I sell? Where do I take some P&L and stuff like that? Be aware of those levels, okay? And there's a lot of tools out there to use. Everybody has different tools, whether it's volume or ATRs or all these different things. So anyways, going back to that. So that's Chug. Did that answer your questions on Chug? Anybody have any more on Chug? So yeah, this was 100%. This was on my list. We discussed it this morning. I wanted off 75. I didn't get a fill, and this was actually on my swing list as well. But you know, you're not gonna always get them, guys. Let me scroll up here and see what else. I think somebody had mentioned, maybe Luigi had talked about the SAP. Now SAP was an interesting one because I thought there was more news besides earnings on SAP, but let me just double check. So SAP, I'm going to draw a conclusion with you on this. I did not trade this, by the way. Oops. Hit the wrong button there. I don't know what just opened. Give me a sec, guys. So there's an opposite part of SAP I want to show you, okay? So SAP, I thought there was something else on SAP, so I gotta try to find it. But SAP was coming down with one yesterday, I think. Damn, losing my mind here for a sec. Oh, SAP. Okay. I think SAP is going to be more complicated to dive into with you guys. All right, I'm going to skip SAP. It's going to be more complicated to dive into with you. Sorry, Luigi, I am going to skip SAP though, because I want to be more prepared on SAP. Yeah. But there was a reason that SAP had come in with something, and I'm trying to remember what it was, and it was, and I'm losing my mind on it because I can't remember, and I'm doing this live with you guys. So I'd rather just move on and do something that's actually going to help you rather than me banging my head on the desk here for a second. Let me just check. Hang on. Scrolling up. Hog. Ricky's been riding Hog a lot. Hang on. Let me look at Hog. Yeah, I think that's what it was, RL. But I want to, but that kind of goes along with, and I want to touch base on this for a sec, is you guys got to be aware also what's going on industry-wise. And a good example, you know, is AMD and Intel and how they're affecting each other adversely from stealing, you know, market share and things like that. There's a lot of, I'm trying to do like a remedial quick webinar with you guys, just showing some of the basics of what I look for in opportunities so you guys could try to find these when they come out with earnings. Another important thing, by the way, guys, is make sure like the stocks do have some volume. The less volume that they have on a daily, it's going to be, you know, when you look at it and you see that trades 300, 400, 500,000 shares a day, it doesn't mean that there's a bad opportunity there, but just have in mind, you get one seller like you have on like an AMKR today, I mean, it could devastate, the whole picture. I think it did that once on JKHY back months back or whatever. There was one seller that was just relentless and was such a thin stock that it came in way further than I would have thought on a name like that. But just make sure there's volume when you're looking at the daily and stuff. So hog, I know Ricky loves the hog. Let me just take a look at this with you. So hog, by the way, I think there was a couple factors on hog, by the way. Didn't he did used to have a pig, by the way, guys. So I'm pulling it up on the side here. So obviously, we can look at, we're going to go through this again. So with what I just showed you guys, okay, let's take a peek. So that you can see right here, the conference call was at 9 o'clock Eastern time. Okay. So you know the conference call, we're good there. So on earnings, $1.05 versus 29 cents. That's actually a really, really big beat. Obviously it's reflecting in the stock. Stock's up $7 or so. Revenue, nice beat as well. This is an example where you could see that they didn't actually give guidance. Their guidance was basically over their conference call. So a lot of these companies, what they're doing is they're not giving everything. Some of the reports, if you know how to dive into the actual, Qs and the Ks, the 10Q and the 10K, which are their reports, that'll help you a little bit to figure things out, because sometimes they word things in there, and a lot of times, the sites will pick them up. But for the immediate look on a name like Hog, you could see very clearly that they obviously beat. I think, didn't Hog also have, there was some news prior, like not too long ago on Hog, it was also pretty good. It's again, guys, it's a lot of work playing earnings, because there's so many different things that you could look at. Everybody has their own tools that they look at. I'm just giving you some really basic tools that will help you guys and what to look at. So, another thing is I actually, and I don't want to dive into it, but I get an idea of what the range might be based on like last earnings. You could look at a stock and see what it did, last earnings, maybe has a $5 or $6 range, rather than trading something that's so tight and maybe has a dollar or $1.20 range based on the last couple earnings. So that's another little tool to use, is make sure you guys are trading some names that actually have range if you want to fade them off a big, huge move, or vice versa. So make sure that there's meat there and stuff like that. So, going back into Hog for a sec. So let's take a look at Hog. So Hog, by the way, had an actual, I think Ricky called this not too long. I don't remember where he was long it, but I thought it was off the 50-day here. He actually played this as a long at one point, and had a really nice trade on it. I don't remember where it was, but it was within the last month or so. But you could see the daily on this. This kind of trade has been lining up, by the way. 23 down, down in this little dip here or something like that. And that was a beautiful trade. So now with this being said, and you can see that there's a yearly level, a quarterly level. I know, folks were trying to fade it earlier, so I'm not going to give, my opinions on whether it's a fade today or not. I just want to talk about the daily. This has moved up, but this trade has been working lately. Okay, so you have to be able to identify that. And what that trade is these breakouts, when you start seeing it, remember I talked to you guys about this earlier, is when they're above all the levels. So you have the 20-day, the 50-day, and the 200-day all matched up here. And when it breaks out, that's been a really clear trade lately on a daily level. So this daily actually looks really good for why you could see a crazy extended move. This has been a hot type of setup. That all being said, as far as what to expect on a stock like this and why, this one sell off on news, it pushed up from 22 to 30 before earnings, or 22 to 28 before earnings. It's a simple answer to me, and the numbers were just that good. We don't, have that crystal ball to tell us something like this. But in this case right here, you could tell where it's pushing up into. If you drag this back a little bit, you see all this prior level. Now that's going back pretty far. That's almost a year out. I usually figure that, that the stock has changed hands by now on a name like Hog. Okay. But just have in mind that this is pushing right into this prior levels and stuff like that, where before this big drop, pulling it back to, and this is a daily that I'm looking at, by the way, guys. So what would I be expecting on a name like this? There's two factors that I'm going to look for, on a name like this. Is I'll always draw from this close 29 up into whatever the high is today, and kind of get the idea on a retrace for two things. First of all, if I'm fading it, where my target's going to be to cover, I think that's important to have there. If you guys are fading this name, bigger picture. And then second of all, it is if you're going to long it, probably if I were to draw this right now, this little pocket in this 3250 area is probably a 50 to 60% retrace. I mean, I could draw with what I was just saying, but let's see whatever the high is. Let's just put it right here real quick and then draw it off that close. There you can see it, right? As I said, 50 to 60%. So if you're looking at, if this started to come in and get heavy and the shorts jumped on it, where would be a level where be it maybe a sweet bounce play or a sweet retrace long? And these are things that I look for intraday. Just so you know, for an intraday trade, you have a name that's super strong, no matter what the market's doing. I'll draw that right from here to here, and you can see it's going to line up right in this area from where that closes. And if you drag it down, that tan line is a close. You follow me on that? So these is another way to find like little opportunities, what I want to do. And you can see it right in that 50 to 60% pocket. Does that help at all or no? All right. All right, guys. So the basics are, just getting back to it is one of the last things I'll leave on it is, okay, so how do you choose, what you look for and things like that. Some of that is just experience, guys, what names I like to trade on earnings. There's names that, no matter what, it's hard to sell myself on a long, certain retail names. You guys got to define that yourself. But overall, what I look for, just in short, and I'm going to talk about the long side first, is I want names that have range, okay, that I feel like there's range, not like a tiny little 30 or 40 cent trade in. I want something with meat on the bone, okay? A name like AMKR, I'm not looking, on this swing to make, 5% and make like 70-cent trade on this. I'm looking for, at this point, if it pushes up in 16 over time or 15s, I mean, that's almost, that's a 30% return or something like that on my swing. So I want there to be really nice meat on the bone. I'm looking for earnings. I want them to beat on the top line and the bottom line. And I also want them to show good guidance. And if I don't know the guidance, I want the conference call to be over and done with, okay? I want the daily to look good, okay? I want the daily to kind of line up, whether it's one that's breaking out. I want it to look good. If it's a pullback on earnings, a sell on news type of thing like an AMKR, I want there to be really good support. And what's going to happen is you guys got to remember, like there's a snowball effect that happens in stocks, okay? And it just does. I mean, like an AMKR, there could be people that chase a certain level or play a 12 clear on AMKR, let's say, just a little bit ago, and you just get a crowded long and it goes lower than you even plan. So you got to, have your plan, stick to your plan, make sure you're able to take the heat, and make sure it's okay to what I've talked to you guys about in the past is trading around your position. If you guys, feel like you're starting to get uncomfortable, there's nothing wrong with having your own outs. You don't have to, none of you guys should be following any of the mods. You guys should be, no matter how great you think they are, is you guys should have your own plan. Because I don't, if I decide to leave this on, and let's say my average is 12 bucks, just as an arbitrary number, okay, and I leave this on for 30 days or 60 days because I could tie up that capital for that. What's it going to do to somebody else that has all $25,000 of their, trading account in it? And they're just now all of a sudden stuck. You guys have to trade your plans. But, going back is I want to make sure that their guidance is good, their conference call, there was no funny notes in it. And adversely, what I want to see is sometimes you're going to see stocks that come out with, another little trick to follow is you'll see, stocks that maybe come out with, say, really good earnings. They don't pop really. Those sometimes, and the market's ripping, market's up 200, and they show relative weakness. Those are interesting things to look at too. When you see relative weakness in a name or relative strength in a name based on their earnings, those are all things that you should kind of keep your eye on. EW is a name that I'm stalking right now. It's such a light volume name, but this is an example of one that I wanted off. I really want to start along on EW down at this 75 area. And let me go back on EW for a sec. There was something on EW, but hang on. I saw you type, Simon. Give me 1 second. Listen, it's not a goose way. There's, first of all, every single trader out there is different, and I respect however they trade, especially if they're successful. But there's some really remedial basic things, Simon, that I got to believe every single trader looks for. Okay. And that's going to be your top and bottom line, your guidance, what the intraday chart, what the daily chart looks like, what levels. You're going to look at the long-term supports, the long-term levels that, if they're coming in, or vice versa, if they're, strong and they shouldn't be. These are all things that are really, really, really basic things. Another one that I really didn't cover, and I start at the very beginning, is coverage matters, guys. It doesn't mean that it's going to long-term affect the stock, in my opinion. Like, let's say, AMKR, UBS comes out with a neutral rating on it with a $10 target. That might keep pressure on the stock for a little bit of time, because people that utilize their coverage and pay for it, they might be circling around to their, 20 hedgies that they talk to pass along the coverage and let them know what's going on, and it stays heavy. I can't control that. What I can control is my homework on the stock and things like that. And a lot of these are really basic things, Simon, to go over. So if you're asking, is this Goose thing, or is it a TrueTrader thing? Or I think this is I've tried to keep this like a real remedial thing of basic things about what anybody that is thinking about trading based off earnings would look for. There's a lot of things that I didn't cover. There's a lot of tools that I didn't cover. And some of them being, like industry related, and just kind of dives in, be aware of what's going on in the industry as a whole, as companies are reporting, what's going on in the economy and things like that, and how things can affect those type of stocks if you're thinking about swinging them or stuff. There's always a bigger picture in it all. But I'm also a trader. Like, I look at the, short and long-term opportunities on these things. So we could dive in and tweak it to, more of a Goose type thing or whatever. But some of the basics that some of you guys have been asking about, these are them. You pull up, you see what's kind of reporting, you look at those numbers real fast, you look at the dailies on it, and you always, by the way, and I want to make sure you guys understand this, action trumps all. It doesn't mean that you don't have your levels you buy at, but action is going to trump anything. If you see a stock heavy, it's heavy. There's a seller there. So be patient on your entries. That's another big thing for you guys to learn. Like, you could take any of these stocks, and you could probably go back on a few names and be like, man, I love this, name. Like, iRobot, I missed an ad on my long. I remember it was off 78 by a smidge. But that would have been great. So patience sometimes gets you, but it always is the right thing to do. Be patient on your entries. iRobot was another good one. I love this iRobot long. My average is pretty good, down by 80. So anyway, that's quick. Can you talk about swing positions, size goals versus initial entry size and ad levels? Rudy, everything is different in perspective to your risk tolerance. And I can't, speak on that. I know Ricky had done a video on, risk management and things like that. But every single trader is different. And I'm not going to tell you how to trade or anything, nor should anybody, but when it comes down to it, as far as, swings, this is how I always have it in my mind is, and let's just say, let's use a really ridiculously low number just so everybody understands. Let's say your max size position is $1,000 on whatever. Okay. No matter what I tell myself, I always leave some sort of edge for that one. Didn't see that coming. For opportunity. And I've oversized in positions before. So when you ask about what's your swing size goals versus initial entry, I always scale into a swing. I'm never full size on my first entry, especially on a swing. A lot of times you guys have seen me where I'm early. I don't care. It's my swing. There's also times that you guys have been part of AYX or an FSLY where same day I'm kicking it for $8 or something silly like that. So I'm okay with when I, start a swing or something like that, I have a plan. So everybody manages their size and their entries. The thing that I would say is I never personally, would go full size first day. AMKR, I have a pretty good size position on this, but I have room to add if it just sits here for a few days or wants to drift down even lower. I have a plan on this, name, and I really, really love it. But I can't control the fact if there's a couple million shares for sale and Joe Bob has it, I might have to sit here unrealized loss for a little while until it cleans up. But overall, I really liked what I saw. Now, if something fundamentally changes, let's say they come out and, they do a raise, a secondary at $10 or something, if something fundamentally changes, I have to eat it. But other than that, and I'm not saying that would happen in this. I'm just throwing, examples out. Is you always want to be aware of fundamental changes on your swing positions. The technicals I can handle more. Taking a little heat. I mean, we've taken heat on stocks like a VIPS guys and stuff like that. That I don't think anybody ever thought I mean, I remember I go pull up posts on VIPs and see how people just thought they were buried forever. They're screwed. They put all their money in it. They put all their eggs in one basket, and all of a sudden everybody's selling up at 20 bucks. And it took a little longer than we anticipated. We don't have crystal balls, and nor do you guys. So sometimes that's the idea of a swing, is something, a certain amount of money that you could be patient on. If it happens in one day, great. If it happens in a week, great. If it takes longer than that, you have to decide, do you want to trim it down so you have, free up some equity, or you want to sit with the original plan? If the earnings are negative, is it immediate short? Are there other things to consider? If the earnings are negative, is there immediate short, or are there other things? No, I mean, you always got to, what happens if they come out with negative earnings, Roddy, and all of a sudden their guidance is, they're good, or they come on their call and say, I know we really sucked this last quarter, but guess what? This and this doubled and that tripled, and we got this new client over here. There's a lot of things. Nothing is automatic. Nothing is a blind trade. What happens if it traded down, from $20 to 14 before earnings came out? It's already factored in $6. Again, look at the guidance. Look at the conference call. Look at what the daily chart is telling you, how it's acted maybe 30 to 45 days prior. That all matters. And it matters for your P&L as far as what your profit potential is, as well as, entries and stuff like that. So 25, 50% on the first buyer, does it depend on how much you like it? Depends on how much I like it. Everybody else is going to be different. There is no set numbers, guys. So any other quick questions on this? I try to keep it pretty basic and cover some things. I've been asked about this. I want to make sure I covered what you guys were looking for. It's hard sometimes for anybody. I know that, for me, and I've been doing this, since 93 or so, to come on a voice and give you all my knowledge that I've had over 27 years or whatever it's been, and put it in a 15 or 20-minute call about something and try to, make it so you guys understand. So I don't expect you guys to grasp it, but the more we talk about it, and the more you get an idea of what what I'm looking for and what a lot of the, traders look for on earnings plays. I think it'll help you. And a lot of times, guys, it's experience. Every earnings season, you'll get a little bit better. You'll notice the action. You'll pull up charts that you like. Just make sure that there's room on it. And eventually you'll start adding things into it. And that's a pretty cool thing. I never know which news to take serious while in a trade. Do you have a few keywords or types of news to look out for during a swing? For example, Wells Fargo downgrading and stuff. Yeah, I've been asked about this a couple times. I'm not going to beat a dead horse on it. How we doing on time? Has it been about 15 minutes now? How much time? What I was going to say on it is in the same sense that coverage matters on a name, I never buy or sell based. I mean, now I'll short stocks because I see a buy recommendation and stuff like that, and it's up, in my eyes to, a key level and too much. Like I don't, and I've talked about, I think last call when I talked about you guys have to have in your minds, and I talked about it. I think I did a webinar that, all these places are compensated to put out research, to put out, I'm telling you, they are, okay. And in some sort of way, whether it's an actual fee that you see disclaimer or whatever, you guys aren't just nice guys all doing it for free. Okay. So in terms of the big firms, they're paid through order flow. Okay, that's how it works. I did a little webinar talking about this. So I don't want to get into that because it's a little bit more advanced, and I already kind of covered it. But you guys just have to remind yourselves of that. That's how, this whole business. It's not that simple whether you see a Hindenburg report or Citron report. It's just not, doesn't work that way. And, you could tell me till you're blue in the face, well, they would have to disclose it. They would have to disclose it. Really? Okay, I've been doing this a long time, okay? And I'm telling you, from experience, that's not how it works. Okay, it's what they want you to see and what they want you to think. So when coverage comes, and I'm not suggesting, by the way, don't mix this up. It doesn't mean that these companies doing research, whoever it is, whether it's a Citron or Hindenburg or any of these other Panda, whatever it is, aren't good companies, and they find out good information. I'm not suggesting that. I don't know these guys. And I'm not saying the guy at Cowen or UBS or Prudential aren't smart analysts. I'm not suggesting any of that. They're smarter than me, I'm sure. But I just want you guys to understand, how that works, and how much you put into it. You're saying that numbers and guidance should be absolutely reviewed before getting into a trade after earnings. I absolutely would think that. That's my thought. And there's companies that don't give guidance, and it has to do with the conference call a lot of times, the action. Sungled. Is it prudent to hold a position through earnings if you've entered trade? That I've been asked that a lot. There's a couple different types of swings. I mean, I'll never sell my Apple. I've added to Apple, and I've shown you guys my average on Apple, so you guys know I've held it for a long time. That's up to you guys. It's some people, like there's some stocks that I'm in, like that I have such a good average on or something like that, and it won't even hesitate me. Like if it comes back, I'll buy more. Just because of the big picture. So it depends on short picture, big picture, or if it's a short term, thing for you. If it's a short term thing, then it's more like gambling as far as earnings go. If you like the big picture of the name and don't care if you're going to be able to buy some cheaper, then you have that's a decision you guys got to make. So it depends on why you're in the swing, I guess, is the way to answer that. I talked around that a little bit, but that's up to your plan and how you do it. Most times, if you're in a short-term swing, it doesn't pay off to, be full size into earnings, let's say, let alone whether you even want to be in it. You've heard people talk in the room as far as, big, economic events and stuff like that. Especially with the election coming, what are we going to do? Swings and things like that. There's names that I will trim. There's, depending on, how I foresee things. Everybody has their own political views. It's not a political discussion, but factor certain important things in. I think, a majority of traders and economists think that if, Biden was elected, that we'd see, a retrace in the market. Have that in mind. I mean, position yourself for opportunity, I guess, is a way to say that. If you're wrong and everybody else is wrong and it continues to just rip, if he was elected, you still have some, but position yourself, accordingly, manage your risk, manage your positions. What else, guys? Anything else before was this kind of what you guys were hoping for earnings? I mean, there's not I kind of freelanced a few names. Anything else that you guys want to throw out? I see it. I don't know if that's a chat thing or not. Hang on a sec. Chat. I don't know where this is going to come up. You guys might see it. Can you take a look at FSLY? Somebody asked. Can you take a FSLY in your opinion? Okay. I mean, FSLY goes. Hang on. Let me look at it. So FSLY is one that I've played last earnings. FSLY reports. Is it tomorrow? Yeah. So they report tomorrow. It looks like post market. So I'm not in FSLY right now. FSLY, I've talked to you guys. They also, I want to say, did a raise. I got to look at the news again. But I don't know whether it was priced or not. But this is the level I've posted in the room that I was thinking about trading off of. And if it gets down there in the low 70s, but knowing that earnings are coming tomorrow, no, this is not a name personally I would buy a day or two before earnings. I think that's a kind of a gamble. Listen, the more that you can look in a trade, okay, and not feel like you're gambling, as it could go either way. Let's see. I feel great about it. That's your ego talking, okay? Make sure you guys are trading fundamentally on stuff, okay? So what's the basis of getting long a day into earnings? Just, my initial thought. And this is just how I would trade it is I don't think there's an edge unless because whether it's your crystal ball or whatever it is telling you that they're going to crush earnings, tomorrow or whatever. That's not one. They've already actually, you see that it's down because they cut their, revenues and stuff like that, right? So I'd be very cautious in a name like that. But I'm not looking to swing it into earnings, FSOY myself personally. Which one? AWI? Just lost on AWI. Why was that not a good trade? What first of all, what did you do on AWI? So you say you lost. I don't know what that really tells me. So this is an example, by the way, on AWI. Let me take a quick glance because I didn't really look. Hang on, I've been on 320, 920, 930, down there. So you can see right over here, and this goes to guidance. And I'm not going to dive into this too much, by the way, Steve. But so this is an example. You see the top and the bottom were okay. But when you read into it, year over year, they went down 18% to 10% and stuff like that. I'm not so sure how good these numbers were, and you could obviously see there was a again, I haven't dove into this exact example, so I don't want to misspeak or whatever. But there's a couple things I'd be aware of on this name right away. What was the other factor that you want to look for besides numbers? Let's say, Steve, the numbers were okay. What was the other thing that I factored in? Hello, Steve. You still with me? Correct. Thank you, Berkey. Look at this chart. Let's just pull it back a few months. I told you guys, yeah. So you go for the numbers, you got to look at the daily chart, right? You got to see what it's done, what it's doing, I mean, if somebody showed me this daily chart, okay, and this could be all hindsight, okay, I get it if it flipped up and was trading at 79 right now, but it's not. Look at the downtrend in the stock. Look at how far away from the 200-day it is, okay, and look at it's below the 50 and the 20-day. And you have all this, all this volume right up and through here to kind of, which I call overhang. I've used that term. So to me, I don't even know that's the idea, Steve, and probably why you had trouble with this name today. And I'm not saying you did anything wrong or whatever. I don't know what you were doing and what you were trading off of. But even though the numbers hit, immediately I look in this, I just pass on it. There's names to pass on. So that's when you're cycling through earnings plays. Make sure the dailies look like impressive. Now, if this gapped up, say this was gapping up at 79 or something like that, and had this crazy influx of volume, the close I know was $65 yesterday. But like, let's say I had this crazy gap up and it was gapping above all this stuff right here, then it's more intriguing. It may be on a retrace buy or something like that, Steve. But this already you could see. Sorry, my 5-minute right here. I mean, it gapped up a little bit. It gapped right up into these, levels here to 70. You got the whole number there. You got the 50-day. It pretty much hit its head on, right? We're to the T. So those are the things I want you guys to learn to look for: is where is the opportunity within? Where lies the opportunity? So in a case like this, AWI that you lost on, if you would have just looked at the daily on this, you would have been like, all right, it's opening up still below these levels on what looks like on top and bottom okay earnings. To me, this could have been one you probably could have avoided. A little bit of hindsight, not picking on you. I appreciate actually people throwing names out that they lost on or they didn't see right, because it helps everybody learn. But this is exactly why I tell you guys: top, bottom line, guidance, daily chart. You guys they got to start matching up. I'm telling you right now, the reason I don't list 40 stocks every morning and put bids in or offers out there to short is because a lot of the dailies don't line up with what I want, or they've traded up too much. You understand? Everything has to line up, guys. That'll minimize your A+ setup or your A+ purchase or whatever. All right. Anything else? And that's another one, Ricky. Didn't I talk to you guys about volume? You guys heard me say volume. Again, watch some of these back, a little bit of this back, and make a little list for yourself. I know I rattle a lot off, and no question is a dumb question, by the way, guys. Like, it's okay. If you're new at it and you want to learn, ask away. But also, we have the answer bot. We have, there's so many things. They're like really funny things sometimes that we'll get asked. I'm not complaining. I want to be there for folks, but they're like really, really basic remedial questions. And you could just type it into Google and it'll ask you, or I answer it. Try to, respect everybody around you, and just make sure you're making an effort to learn, because the tools are there for you guys. They really are. If I missed anything, I don't mind, coming back on another time and covering a little bit more. Anything else, guys, before I sign off is kind of, I know I say guys a lot. I mean guys and girls, by the way. Guys and ladies. Hold on, somebody typed in this chat thing. Let me see. Chat bubble. How about HYLN? Yeah, I'm in HYLN, by the way. You know, I don't want to go through all my swings right now. Okay. My ad, by the way, on HYLN is off the 200 day. It hasn't gotten there yet. But a lot of this guy's like I'm not even looking at it. I have my alert to come out and things like that to look at it and decide. And the one thing I want to get from I want you guys to try to learn is, and I think again, I'll say the same thing. I think a lot of it has to do with sizing, folks, is learn to be more patient. We put these ideas in and learn to respect some of the gains you guys have on a percentage basis. You know, some of you guys maybe got spoiled on your first couple trades or whatever it is. You know, some trades that are like 20, 30% returns, even though there are a couple dollar moves on the lower price ones, be it a VIPs or whatever, or big monster ones that I'm looking for, like let's say it's a loop or something like that I'm in, or an AMKR, and I'm looking for these gigantic, I have no problem sitting and waiting for these things to work out. They don't always work out right away. It's just part of the game that we're in. So just have that in mind. Again, you know, like IBM, you know, I'm still in IBM. I think I haven't added anything, but I like IBM overall for a long. These are all just examples of stocks being a little heavier for a little bit. You can walk through and say, "Oh, guys, all good." Okay, thanks, Carla. But hi, gals, just doesn't work. It's funny. All right, anything else? Anything else, folks? How's that? All right, I'm going to cut it off there. Hopefully that was helpful for you all. Feel free to reach out. I know that, you know, Ricky does webinars. Everybody's doing webinars now, and it's amazing. I mean, we have option guys. I mean, we got a lot of stuff going on here, and hopefully you guys are utilizing all the tools. I mean, it blows me away the amount of tools and things that you have out there at your disposal. You guys, don't miss that. Like, especially if you're learning the business. If something isn't making sense to you, you know, study something else. It's okay. And if you're just starting, you know, trade tiny. Who cares? You know, don't try to impress the guy next to you that says, I made 500 bucks today or 5,000 bucks today. Who cares about what anybody else is making? This is an amazing living, guys. Like, I love what I do. I am blessed to, you know, be able to have my wife do what she needs to do and take care of our 3 kids. And man, it's the most beautiful lifestyle and thing. But you guys got to understand, it's not simple. You guys got to study, put the effort in. That includes asking questions. It's okay to fall down, but make sure you're managing your risk and stuff like that. There's a lot of things that go with this, and you know, stick with it. Reach out if you guys need any